Now it's time for an in-depth look at markets around the world, including Korea's. And for that, I'm joined on the line by Dr. Hwang Seiwoon, Research Fellow at the Korea Capital Market Institute. Dr. Hwang, thanks for coming on today.
Thanks for having me today, too.
So stocks on Wall Street overnight seem to stabilize after President Trump said that the trade talks with China will continue. All three main indices up, at the Nasdaq by more than 1%. Are investors reassured that in the end there'll be a deal? What happened in the markets?
In Wall Street, stocks ended higher Tuesday, regaining some of the sharp losses from the previous session, as the market weighed down the impact of the escalating trade war between the United States and China. The reason we are seeing this recovery is because the fundamentals haven't changed and the U.S. economy still remains strong. Ongoing trade flare-ups may continue to swing the stocks in the near term, but I think the market may already have priced a lot of this in. Asian stocks struggled near a 3-month low on Wednesday on lingering concerns over the economic impact of a U.S.-China trade war, although an overnight bounce on Wall Street helped recover some of losses from previous sessions. South Korea's Kospi added 0.53%. Japan's Nikkei gained 0.58%, and Shanghai Composite rose 1.88%. However, investors will have to brace for a protracted U.S.-China trade war.
Well, because of those trade tensions, in large part, the Korean won continues to weaken. It's at a more than 2-year low against the dollar. Why is it that the won is affected so much, and how long will this go on?
The South Korean won was traded at 1,188.61 per dollar as of close today, up 1.11 from Tuesday's close. The local currency, one of the world's worst performing currencies over the past month, may further lose ground down the road, possibly flirting with the 1,201 threshold, given a slew of factors pointing in that direction, although its current downward momentum may ease in the near term. The market sentiment is so risk-averse, and the $1 rate will attempt to further rise. The Korean won has been on the weak side since the U.S. and China reopened a trade dispute. Adding further downside pressure on the currency is the country's weaker than expected economic performance in the first quarter. Investors will need to pay more attention to such factors as the Chinese yuan's moves, foreign investors' actions on the local stock market, and the currency authorities' response.
Well, shifting gears here, as we heard just a minute ago, we now have the jobs figures for April. More than 170,000 people hired last month, but at the same time, youth unemployment, for example, at an all-time high of 11.5%. What effect, if any, do indicators like this have on local stocks?
South Korea's jobless rate rose to 4.4% in April. Government data showed Wednesday, in the latest sign of a weak job market amid an economic slowdown. The unemployment rate increased 0.3 percentage point from a year earlier, according to the data compiled by the Statistics Korea. It also marked the highest level for any April since year 2000, when the corresponding figure stood at 4.5%. If employment shrinks, it will lead to a slowdown in the economy along with corporate earnings growth. This is expected to have a negative impact on the Korean stock market, but the stock price has already been priced in. Thus, further downward price pressures from the weak job market are limited.
Okay, got it. Well, that's where we'll have to leave it today, Dr. Hwang. Thanks again for coming on. We appreciate your insights.
Thank you very much.